All right, guys, good morning. You're welcome. This is another beautiful week, week 28 on the year 2024. So we are actually looking at another beautiful week to forecast and predict, kind of analyze the market for the next coming week, which is starting tonight for trading week. First of all, if you haven't watched the previous video where we talked about how this market was supposed to move this week, I will encourage you to go watch it. We analyzed the GU market, the Euro USD, and the SP500. So we're going to do the same at the moment. And I'll go to the higher time frame to look at the behavior. I told you last week that we might have a much push to the upside. And as you can see, that has happened. We have another push up to the upside on the 4-hour time frame, and on the daily, we appears to be bullish, which I obviously was anticipating that if price break above this high, that means this previous structure high, then we're going to go up. As you can see, that was exactly what happened. So we have price rejecting below, breaking below this level, which we created as a support, and then eventually rise to the upside. As you can see, we are now obviously bullish on the GU market. So if you look at the weekly, again, we mentioned that the weekly candle is obviously bullish. The price is still bullish on the weekly, and we were anticipating that price will eventually push up. As you can see, last week was a massive bullish rally, which eventually gave us a profit rally. Yes, last week. So we had profitable week last week. So again, what do we expect? Of course, the market is bullish all along. So what I want to show you is this key level here on the weekly time frame. So this area where price created equal highs and drop, and it's where we're going to be looking at. If price break above this high this coming week, then we're going to be taking out this high. Then obviously we should be anticipating this high as the market rally up. Then we'll be looking at obviously this area for the market to come into, which would be one of the greatest change and for a long time in the market. If the market will get to $1.36 for pounds, I mean, that would be an amazing thing to talk about in the British market. But at the moment, let's hope that happens. If this high is broken, then we know if they breach this area of market structure, we know that this high will be the next. And if they take out that high, obviously, this is a long-term view. If they take out that high, then obviously we know that the next move is going to be on this area of price action. And again, it could be possible for that to happen. So let's keep our finger crossed. Now let's do the day trade analysis. We are day traders. I also do swing trades, but I want to look at the opportunity that we have as a day trader, and also possibly give you an idea of swing trades that may happen. Now let's look at the daily time frame. That's the area we need to really focus on. Now on the daily time frame, as you can see, we're bullish. We have this price area here, which you can tell this is a structure. And if we should arrange that weekly time frame, that weekly support resistance level that we created, we'll obviously put it like this. So so what does that mean? It means that if the market break above this high, I want you to mark these zones in your on your trading view. If the market break above this high and close above it, there's nothing stopping it from coming here. Okay, that's what we're looking at. So the first thing is to know what is the range from here where price is at to that level. That's about 50 pips. So in other words, if the market move 50 pips this week above that high, then we're going to be buying all the way. But never to follow that what do you call it, assumption. Let's do proper analysis. So we'll go to the lower time frame. We want to see exactly what price might do here. Now we can see on the 8 hour time frame that there is an order block on this level. And also let's say the 4 hour. Beautiful. So we have another beautiful 4 hour giving us what we call fair value gap. So we can see there's a fair value gap on the 4 hour right there. And this area is a very strong interest, price interest area. We should be looking at possible either a retracement or a break above. Now, if price break above this high, let me take off that session. If price break above this high, possibly we are rallying up. So what we need to do is to put, we can see that at this level is psychological level of 1.2800 is the area we should be looking at. That's the psychological level of 1.2800. So I'm going to adjust this to psychology level of 128,500 right there. Right there. Great. So also I can decide to shrink it a bit so that it can take that previous high. Great. Now, this is the area we're looking at price pushing to. So we expect price to push higher on this. So what we mean by that is from here to this level is about 30, to that psychological level is about 30, 40 pips, okay? So price will push up 40, 30 pips. Now, watch what price does around this level. If we find a pullback, if the market pullbacks, all right, and rejects and pull back, there could be possibly another push-up that will break that high. So be very careful because 2,800, 1.2800 is a very strong psychological level, which is down there. Yeah, that's 1.2800. It's a very strong psychological level. So we know that price is already above that key level, that key psychological level, strong major psychological level. So in retrospect, we can see that between 1.2900 to between 1.2100 and 1.2800 is 100 pips. So we can see that price rejected at 1.28500, which is a psychological level there. So what that means is price rejected here and rally down, and then eventually create a market structure, breaking the previous high, pull back and rally up. Now it's rallying up now. So this is not any reasonable pullback. So this is the impulsive move to the upside. So my thinking and what I'm expecting is that they will tap into this area again and then pull back before they rally up. So for that reason, I will be measuring this area. Let me just take that back out. I'll be measuring these two areas, which is 1.28, 29 there. And also we may have this area being the place that the market might try to retrace, possibly. All right. And then if we can look at the coordinates of that will be 500. So that's the coordinates. So we're looking at price pushing there and rejecting, and that will give us a reasonable area to look at another rally. So expect price to continue to the upside. So what am I telling you? For the first for the first this week that you're coming, I'm anticipating that will we have another beautiful 100 pips for the week. Now, if you have 100 pips if you collect 100 pips in 1 week, do you know how much that will be? Depending on the account that you trade, depending on how you trade, but give or take, that's 2 trades a week. If you're able to collect 100 pips this week from that place to that place. So we are anticipating that the market may move up. But if price, listen and pay attention. But if price break and open up and close below by retracing without pushing up higher and close below, or even pushing higher and close below and retest, do not buy the market yet, because the market may come down to take out liquidities at this low. So why is that? Let me explain a few things to you. If you go to the weekly time frame that we saw earlier, you will notice that the market struggled for several weeks before pushing this higher. Okay, now if you move to the daily, you will notice, the monthly time frame, you notice that the previous month was bearish. This is a new month. So do not think that it's going to continue upward like that. This is a new month. We are just in day 7 of this month, and look at how it's pushing up crazy. We have another 20, 26, 21, 22 days. All right, we still have about 22, 23 days left in this month for price to move on this monthly candle. So I think this push-up may not stand long, may not stay for too long. There could be possible pullback. That's why I'm saying, of course, the market on the is trading above the moving average, is looking bullish. That's fine. But there might be a pullback. There might be a pullback, a retracement that will link to a liquidity grab. The previous month was bullish, but look at the previous candle. Look at this month. This was the month of April. And what happened in the month of May? It went bullish. In the month of June, we went bearish. Now, this is the month of July. It could go bullish. It could go bearish. We are not sure. But price obviously is trading above the moving average. So we expect that it could remain bullish. So that's why we're marking out. So you have to mark your guard. Understand that it might not go in the direction that you anticipate. That's why I'm showing you this. Now, let's come back to the 4-hour time frame that we're looking at. So I said, if price decide to break below, so you mark this, ensure you're looking at the psychological level 1.28. If price trade below psychological level 1.28, then we should be looking at the market going to 1.26. Why is that? Because of liquidity. Now, whenever the market leaves liquidity behind, which is all of the zones, it will come back to it. It might take a while, but it will come back to it. So here are liquidity areas that the market will come to. This is a strong liquidity zone that the market will come to. So for that reason, you want to be able to anticipate where they are going if they make a return, a change. But we still hope that they are going to push up. So we draw out a plan. If they hit the 1.25, 1.28, 500 and retrace, then we should look to buy the market at 1.28 if there is a rejection. As long as price is still trading above it, we should target 100 pips or above. But if price retraces and start dropping and closes below 1.2800, then we should be looking for sell, because the market is going to create a liquidity pool. It's going to target the liquidity pool that is already created. Do you understand? So this is the take I'm having on GU. But right now we're bullish. GU is bullish all the way. The daily is bullish. The weekly is bullish, is looking bullish, as we can see, and we have 4 hour is bullish, 8 hour is bullish, the 1 hour is bullish. In fact, all of the time frame are looking bullish. If I should just walk you through them, you see they're looking bullish, bullish, bullish. Everything is stretching up, everything is pushing up. Okay, everything is pushing up, as you can see. So now we want to see that retracement back into this area. and then price might push up a little bit higher. It might still go up to target this high. And for those of you who trade a smaller time frame, this is a beautiful target. For instance, you can see between here, all right, this is a psychological level of 1.2800 to this 1.28500. I mean, yeah, 1.28500. You can see that is 50 pips. So that means if you know what you're doing, you can still trade this push-up. Like you can see, there's a breakup structure and there's a pullback. You can actually get a buy. Let me show you. This is not a trade setup. Do your work, do your findings, but I just want to help you out here. Now let's see, you have the fib here. Okay, we have 38 retracement. That means we have price coming to entry here. So that this level, okay, I'm expecting the price to come all the way down here. Okay, go back into this level, kind of rejecting from there and then rally up. So I'll be expecting this move on GU. So I'm going to be long in here or here and put my stop loss at the previous fib low. And I'm be targeting this high for the first take. So that would be my first trade I'm taking. So if price reject from there and pull back again, I'll be waiting to buy again from here. I'm not selling the market until price break below this 1.2800 psychological level. I hope you got the idea. For those of you in my mentorship class, get ready on Monday. I'm going to explain all of this to you, and hopefully we'll be able to catch this trade. But I just want to share this with everyone who's watching. So I hope you got it. We're going to be buying, and if we intend to sell on GU, then we must wait for price to trade below 2800. If price trade below 1.2800, we are looking to sell the market. We will not be buying anymore, because at that moment the market will be targeting liquidity pools at various levels, especially the major liquidity in this area. So we might have a drastic drop that will come in on GU, and that will lead to this massive liquidity area that they are coming to take off. So for that reason, we should be very careful and watch. I'm going to be watching GU. Remember, it's my favorite pair. I trade it for the past 2-3 years. I've been trading this pair one-on-one. So it's amazing to know. All right, let's go to Euro USD. We're going to look at the Euro USD and see the same. All right, this is the trade we took on Euro USD last week. We have to close on Friday. We close out on the trade on Friday. For those of you in the mentorship, you know we took this trade and this trade. So we were on this trade, and we have to close out after the news section. We were able to close out because I told them to leave it. Whether the news or no news is going to favor us. And obviously, we had a spike to the upside. So while that is there, I'm going to create a new chart. Let me just remove all the drawing right now. Okay, that trade is already executed. We're done. So we can see that on Euro USD, we're bullish. Again, Euro is bullish. So that's a great sign. We are bullish on Euro USD on the monthly, on the weekly, and we are bullish on Euro USD right now. But again, just the same thing as GU. We have the previous week, a previous month was bearish, and this month is like pushing up. So I know that Euro USD will push higher because of the liquidity pool here. So if Euro USD push higher, tap into this high. So we should be expecting that Euro USD will come all the way up here at the moment. So that means we still expect a push up on Euro USD. And if that happens, then we're going to have a push up on GU. Do you understand what I'm saying? So it's very important to know this. Now, every time frame on Euro USD is bullish. The market is bullish from monthly to weekly. I just want you to see this. You say, well, where is it? It's not looking bullish yet. No, look at price. Price created a lower high, a lower low. This was the lower low and pull up to break structure high. You see, price broke this structure and then push up and created a higher low. This is, look at it here. Look at it. That's how you know we're bullish already. That's a sign that the market is rallying up for bullish momentum. And then price also trading above the moving average, 21. So we can see that we are bullish already. The market is swaying up. So we're bullish. That's on the weekly. Look at it again on the on the daily time frame, we are also bullish. Why? The previous structure has been broken. Price dropped and then created liquidity here, and then came back to take that liquidity out with a gap, and then came back in and rally up. So we're still bullish. We're bullish right now. So this is daily. We're bullish. And if you look at the 4-hour time frame, we are also bullish as well. The market is rallying up. We are bullish. Okay. Now, having established that fact, what we're targeting that price will come to is the psychological level of 1.0900. This psychological level here, 1.0900. So this is 1.8500, which is the minor psychological level as we anticipate. Between there is 50 pips, but already we can tell that price is trading right there, below it, below the minor psychological level. So this is the major psychological level that the market just break above. Okay, this is 0.0800 right here. So we can see that price is already getting close to the minor psychological level, which we may anticipate a pullback on the lower time frame. Okay, price may pull back on that. We could tap into that level and pull back, but we're bullish, we're buying. So in an upshare, you want to wait for price to tap into that place. You're not buying from there. You wait for price to create a pullback. Now that pullback may tap into this, but anytime price break below 1.0800, if price break below this, it's going to sell. It's going to sell. So as long as price is trading here, the worst case scenario is that price retrace all the way to 1.0800. If it retrace all the way 1.0800, then we're looking for buys. That is the area, and then we'll target 1.0900 psychological level as another move of 100 pips to the upside. Do you understand? Just the same way I analyze, because there's a lot of liquidity pool on Euro USD that the market is coming to. If it breaks below this low, this area of major psychological level, then we should be looking for sell. Then the market is going to drop. Please do not forget, watch this video again and again. Very important. Very important. Watch out these key levels that are marked out. They are very important that you understand that price. You see, look at what price did here with the news. It sparked down, tap into that major psychological level and faced to drop below and rejected and went up. So I'm anticipating that if they tap into this high, which is that minor psychological level, price is going to drop. There will be a massive retracement, and that retracement will come all the way to fill up this imbalance here, which is this wick here, fill up the wick, and then eventually create price action for us to buy from here. Then we will look for buy around this level. And remember, this is just analysis. You have to look at other fundamentals. You have to look at the sentiment of the market, and time will not permit me to show you all of that on this video. And that's why I teach my mentors, my mentees, show them how to look at these three markets: the technical analysis, the sedimentals, and the fundamentals. You have to have a complete knowledge of what the market is doing before you can take those steps. All right. So this is what we have on Euro USD. Now, SP500, which is one of my newest commodity that I'm looking at, or indices that I'm trading. First of all, let's go to the 4-hour time frame to look at the behavior. On the 4-hour time frame, what do you see? We can see that the market is bullish. All right. On the daily, the market is bullish already. So we know this is a bullish market. You don't want to even go there. It's a market stretching up. So the question is, how do you trade this? Now, the market is already planning to retrace. That's what you're coming for. So wait for liquidity grab. You see this low. These are all liquidity area. This is SP500. You want price to take, mark it up, just the way I did it now, mark it up. This is 4-hour. Wait for 4-hour liquidity grab. They will do it. Don't buy it until there is 4-hour liquidity grab. Once they take out this liquidity, they are going to rally up crazy. And that's the market for you. That's what you're buying. Until this happens, do not buy. It may push higher. Fine. If you push higher, we'll look at it again. But the candle that just closed right now is telling us that the market wants to retrace down. So that means the next 4-hour candle, we will be seeing another drop. So what do? You want to sell it? Fine, you can sell it, but be careful. So what do? You create a barrier here. That means market support level. You create a support level there, all right? And then you leave it that way. So what do? You go to a lower time frame. Let me remove some of these things first so you can see. You go to lower time frame, okay? Here's what you're looking for. You want price to break below that area, okay? That structure area. And then you can trade this level for a sell, but be very careful. Remember, you're buying at this area. So if you're going to trade it, you want price to break below, retest, and then you sell. All right. And then at this level, you're looking for a buy because there will be a liquidity grab at that level. See, price will eventually take out liquidity. All this liquidity will be tapped into, and then you want to buy from there. So this is exactly how I'm looking at SP500. You may not be able to understand it right now. You have to watch my previous videos and see how I trade SP500, but still, it's very easy to follow. Just follow what I said. Wait for price to break below. If you want to sell it, you can wait for price to break below the structure and sell. And then sell to this level, get out. Because after liquidity grab, they are going to rally up. I think that's it for now, guys. I don't want this video to be too long. And for those of you who are new to our trading platform, hit the subscribe button, hit the like button, and also look at the links in the description below. Whatever favors you want to join our mentorship, you want to take our courses, you want to join our Telegram group, whatever you want to do. Listen, it's up to you. The market is for everybody. I'll see you in the coming week, and I hope you guys enjoy trading. I'll see you. Bye. Bye for now, guys. I'm done.